Hi, good evening, everyone. Thank you for tuning in. I'm Ryan, and with me is Kaiwan. Tonight we'll be going over the 2016 macro outlook.
Macro trend is the China aging population. We expect China aging population to grow. As you can see in the graph below, China population is hitting an inflection point. They are facing a massive demographic shift as 412 million of middle-aged citizens enter the rank of elderly over the next 20 years. So with this aging population, retirement planning and health awareness are being promoted by the government, and we expect growth in the healthcare and insurance reform. So healthcare to dominate over life, as you can see in the insurance premium, traditional life premium has actually slowed down, and there's an increase in the healthcare premium in the insurance sector. So we expect this growth to benefit the insurance sectors. So these are some of the largest China insurance company. You have the China Life and Ping An Insurance. These two are the largest insurance companies in China. In the healthcare sectors, you have the Zhongyuan Union and the Eyes Hospital. They are all listed in, for the one that's starting in 3015 is listed in Shanghai Composite Index. So if the Shanghai Hong Kong Stock Connect is linked, investor can trade this counter through the Shenzhen Hong Kong Stock Connect. And lastly, we are going to touch on the Hong Kong deeply discounted sectors shares against the A shares. If you look at the valuation across China, the H index are the lowest among all the indexes, and you have the same counters trading in the A and H exchange. But if you look at valuation, the H are deeply discounted against the A shares. So I have above the A and H premium chart. So we can see that the discount ratio is still being there, and one of the bulk reason is when China did a stimulus, most of the stimulus are directly going into the China listed company, and most of the local citizens are more speculative, and there's also an increase of margin account when the index was trading higher. So most of the money inflows are still going into the A shares itself. So that's why there's such a big disparity. However, we feel that this AH premium couldn't sustain for long. As you can see, we have the 20 discounted H shares over the A shares. You have Sinopec trading discounted at 77% against their A shares premium, and also the Shanghai Electric trading at 65% discount against their A shares premium. So for us, we feel that there is going to be a closing of the gap between the H and A shares when the sentiment of the China economy improves. So because we expect volatilities in the year of 2016, we also have a defensive companies by the power utilities company, mostly revenue positive, and also giving out dividend yield and large market cap. And also for the year of in the China 13 economic plan, they talk about going into clean energy. So they have a tariff cut for the wind and solar power project in 2016, and also we expect some M&A in the public utilities company, because this accelerated reform will promote the direct sales of power, and would also come out with a more efficient power sector to bring down prices, providing indirect stimulus to industry, user, and the economy. So one of the key sector is the renewable energy. what we can see in the Huaneng Renewable and the China Datan Corporation Renewable in the Hong Kong market. So these two are China's largest renewable energy counters. And also for some of the company like Chong Kong Infrastructure and Power Asset Holding and CGM Power. For example, CGM Power are going into nuclear energy, and Huatian Power is also going into nuclear energy. So we expect this power utilities company to have a better growth when they started to have their clean energy, as China aims to be the China clean power commitment is evidence in this capacity goal, especially in the solar sector, and they increase the solar sector to 100 gigawatt by 2020 with the current capacity of only 35.8 gigawatts in this June. And we believe that this China long-term strategy for rebalancing the economy towards consumption will continue, and the correction in the equity market doesn't seems to have hit the confidence of consumption in the China spending itself. And for that, we have actually comes to the end of the presentation.